Okay, we might get started in a minute and at least get going with intros, etc. So firstly, good morning, everyone. Thank you so much for joining us, and welcome to our event around taking the positives from CSRD reporting. I'm Claire Wilson. I'll introduce myself on the next slide properly. But for those of you not familiar with Stratton Craig, we are a strategic communications and content agency, and we really specialize in written communications and have experience in all types of content, from social media posts to white papers to annual and sustainability reports. And that's what we're here to talk about today. Before we do that, we'll quickly introduce ourselves. As I said, I'm Claire Wilson. I'm head of copy and strategy here at Stratton Craig. That means I lead the team of writers, and I have a background as an investment writer myself, with 15 years in investment management before I joined Stratton Craig. And I'll hand over to Tim, who'll introduce himself.
Thanks, Claire. Yeah, hi everyone. I'm Tim Marklew. I'm reporting lead at Stratton Craig. So I've been a copywriter in corporate comms for nearly 15 years. The predominant amount of that time, just over 10 years, spent writing annual and sustainability reports. And yeah, spent the last kind of year or so getting to grips with writing CSRD reports.
Wonderful. So today, what we're going to be looking at is the state of sustainability reporting in 2025. Obviously, in a changing environment, we'll be looking a little bit about the examples of CSRD reports that have already come out and what we can learn from those. We're going to really talk about the impact of that CSRD requirements on storytelling. Obviously, it's a keen interest of ours as a written communications agency. But then we're really trying to look at how the new features and principles of CSRD can actually really elevate your sustainability story. So, a very positive focus for us today.
Yeah, like Claire said there, we're kind of content writers. We're not consultants. So we're all really interested in the kind of the words on the page, the story that you're telling. And like I said, I started in annual reports and then moved over into sustainability reports because sustainability reports are all about great stories. Sustainability itself is about doing good, making a positive difference for people and planet, improving the lives of the stakeholders that you touch, as well as wider society, and kind of being accountable for any negative impacts and trying to minimize any negative harm that your company might be doing. So yeah, it's really kind of a great story to tell about you're making progress that's benefiting all, and we really want that to come across in an authentic, transparent, and engaging way as much as possible. Like I said, shifted over into sustainability reports because I always saw sustainability reports as like the kind of cool younger sibling of the annual report. It's more free, it's more creative. We're not burdened by pages and pages of financial tables and notes explaining everything. It can be a bit more kind of fun and playful with it, as well as obviously addressing the kind of very serious subject matter. But recent years, a couple of trends have been kind of complicating the process of telling that story. And the first is that, compliance requirements have kind of come around. And, to be honest, we've had kind of people from an accounting background trying to shackle the free sustainability report and make it more like financial reporting. And, as you can see from some of the headlines that you got here, as CSRD was announced and then got closer and closer, it was really seen as kind of burdensome and something that people should be worried about and that it was going to be painful. And while we're not here to kind of debate the merits of having to comply with this, it's undoubtedly kind of a fact that CSRD has made sustainability reporting harder and sustainability storytelling harder. Secondly, we've obviously, we don't want to get too much into the geopolitical situation, but turbulence in the world caused by certain events has kind of emboldened those who don't agree with sustainability and the sustainability agenda to kind of, push for backlash. And unfortunately, big companies have kind of buckled and budgets have been cut and targets have been removed. But also, as we've moved through the decade, companies that set ambitious and stretching environmental targets have had to kind of backtrack and realize that what they wanted to achieve wasn't achievable. And that's led to movements like the SBTI having to take away kind of validation of plans and targets that were in place that had been put in place with kind of good faith. And then finally, even the kind of lawmakers that, put all this work into making CSRD because they believed that sustainability reporting was really important. Even they've kind of backtracked now and decided that, not as many companies are going to have to report. And companies are not going to have to report in as much detail as before.
Sorry, I went too quickly there.
That's all right. And, just because things are never straightforward, we've even had a backlash to that backlash. Sustainability leaders in the market have come out and kind of slammed the changes and said that it's deregulation. It's not even going back to how things were. It's going back to things, even further back. And I recently just saw some research from Horvath that they looked at 100 CSRD reports and found that 94% of them were fully compliant. So maybe it came a bit soon, this stepping back, and maybe although all these projects probably were painful, everyone was able mostly to kind of get there in the end.
So, as I mentioned earlier, we are, despite all of this, remaining very positive about what can be taken from CSRD, because despite all of these factors, the companies we're working with are doing more than ever, and we find that really encouraging. And we think that they have even better stories to tell. Obviously, we would say that. But we also think that CSRD is going to be dragging best practice forwards, regardless of who needs to take it on board or not, because enough people are still changing their approach and taking into account aspects of it. So it's important for us to say here that we don't believe CSRD reports are perfect. From our point of view, with a focus on storytelling, we think they're too long, too technical, and they're not designed at the moment for all of the audiences that we like to consider when we're writing. And we have seen some reporters let storytelling go entirely in meeting disclosure requirements, which we think is a step backwards. But we very firmly believe there are plenty of positive practices and principles that we can embrace from the new reporting standards. So whether you don't have to comply yet, no longer have to comply, or never had to comply, there are things that we can learn from CSRD reports. And those are the things we're going to be looking at today. So firstly, better materiality. So CSRD mandates double materiality, as I'm sure everyone's aware, and that widens the focus for companies, identifies new topics they can discuss, new stories, and new people to include in the narrative. Value chain reporting has really exploded with CSRD, and that means companies are telling a broader story about their place in the world. And we, believe that kind of context is always helpful in terms of explaining why things matter. CSRD reporting has brought the growth and the financial story and the sustainability story closer together, which is something that we think has been people have been trying to do for a long time. But CSRD has, taken a step change in that direction. Now, this is a controversial one. Policies, not sexy, not cool, but they are a really big part of CSRD reporting. But they're really important in terms of demonstrating companies' commitment and buy-in, and the elevated role they play in CSRD reporting, we think will serve to really reinforce practices throughout companies. And finally, the free and sometimes freewheeling approach to sustainability reporting in the past has led to a fair bit of inconsistency across reporting. So we really think that there is a benefit in improved comparability. We also should have mentioned earlier, but we've got to say, we've got one of our wonderful clients, Anne Euler from Paysafe, is going to be joining us later in the webinar to discuss some information, her approach in terms of the reporting this year. But before we get there, we'd also like to open the floor to everyone listening here today. We have a sense in terms of what people are struggling with for around the burden of CSRD reporting and sustainability reporting in general. But we'd love to hear from you guys. Which of these factors impact your sustainability reporting process the most? Is it action leading to more positive stories to share, keeping up to date with best practice? Is it just meeting the compliance requirements? Or is it the demands of stakeholders you're more concerned about? Now, if all the tech works, I'm about to launch a little poll, which hopefully everybody is seeing on their screen. And I will know as soon as I start getting answers in. Yes, there's answers. So yeah, we'll leave this open for a few minutes. We're just really interested to, sense check really what's keeping you up at night, whether these are the challenges that resonate with you. Yeah, not surprisingly, we're seeing meeting compliance requirements come in very strongly. And I guess that it does align with sort of our sense of talking with clients and the kinds of challenges people are facing. And I guess from our point of view, we're really keen to make sure that I guess we can retain some of the benefits of the more storytelling and engaging approach despite needing to meet those requirements. And we think that's really possible. Okay, so I am now going to hand over to Tim, who is going to discuss our first factor around materiality.
Thanks, Claire. I mean, it was positive to see on that poll as well that the close second was striving to keep up with best practice, and that's kind of what we're talking about today. Like Claire said, CSRD is going to change best practice, even if people don't have to comply with it. And that's the areas that we've really picked out in terms of these are the things that people are doing because of CSRD, but are great for everyone to do and that can really help your story. And you don't have to do it in the fully compliant to be checked by auditors way. You can take these ideas on board and just make your story better at kind of in any way. And it will still kind of have positives. So yeah, the first one we want to talk about is double materiality. So I think like the expanded process of double materiality is probably the most kind of positive impact, no pun intended, that CSRD has had. When the kind of omnibus rumours were swirling before it was announced about what was going to be cut, it was proposed that the DMA, the double materiality assessment aspect, might be removed. And I saw kind of widespread anger. It was the main thing that people were really saying, well, no, definitely don't get rid of that. We need that. And I think that's because everyone can see the kind of the value of better materiality. We all know that the issues are there. So just because you don't talk about them doesn't mean they go away. Expanded materiality just brings more topics that are relevant, more impacts, more risks, opportunities, etc. Just brings them into the stories, and they're there kind of anyway. And categorizing things by impacts, risks, and opportunities also just helps us to tell a better story. It enables us to bring in more kind of aspect and a bit more depth to the materiality. So if we start with a couple of examples here. These examples, this slide and the next one from Novo Nordisk and Heineken show side by side how they presented their material topics last year versus this year. And as you can quite clearly see, there's kind of a big leap on from the amount of information that's presented. We've got more topics. They're categorized into impacts, risks, and opportunities, like I said, which is helpful. They're mapped against the value chain. They've got a time horizon element in terms of, when they're going to impact, when they're going to kind of the time scale that it's taking place on. And so I think you can really see here that just by doing that DMA process, there's just a greater kind of story there that's being shown. So here's Heineken. So they've moved from, the typical fairly simplistic materiality matrix into this more detailed table that has this kind of greater level of information, and that's just really helping to set the scene better for the audience. Now, of course, it's not just about where you talk about double materiality, although in this section, this example here, I think that they've done something nice in terms of they've separated out the two aspects of materiality, which again tells a nice story building on what they had before. It kind of adds a layer of depth by showing them kind of sitting next to each other, which is helpful, and then it adds another layer by having the scale of the impact be shown quite clearly by the size of the coloured circle that you can see in the example there. So we thought that was a nice touch. But yeah, it's not entirely about the dedicated materiality section getting better. It's about double materiality enabling you to tell a kind of a better and broader story. This example from Lundbeck here, they didn't have a section on pollution last year, even though they'd done kind of traditional materiality, it hadn't identified that as a key topic. Whereas having done a DMA now, they have a whole kind of section on pollution, which is really just showing you that they had this topic that they were affecting before. They weren't talking about it, but the DMA has now made them talk about it, and that's good. It's kind of informed the way they've reported as well. So they've got talking about it in their own operations and the value chain. So again, that's kind of that CSRD value chain aspect being brought in. And it shows that, quite possibly there's whole material topics that companies were just not talking about before that they have to talk about. This is a pharmaceutical company. Pharmaceuticals going into soil is a kind of an emerging issue. And the DMA kind of forced them to talk about that for the first time, which is really positive.
Yeah, so next up, we're going to have a look at the value chain. And again, in a similar way, we think there are real benefits in expanding the story beyond your direct operations. So like the materiality, that word is hard to say. Materiality examples that Tim talked about, particularly Croda, impacts, risks, and opportunities stretch beyond what you're in total control of. I think we all know that. For example, scope 3 emissions is such a huge part of sustainability reporting now and really vital to, companies' efforts to transition to net zero. Human rights violations, similarly, might not be within your direct control, but so important in terms of a brand's sustainability and, very much on the minds of consumers, and all the companies I work for really take those issues seriously. So covering all of these impacts really ensures a balanced and transparent story focused on those key issues. So we've got a few examples of some companies that we think have done a really good job of rooting their report in the context of their value chains. So this example is Orsted, and this is such a great report. I've got 2 pages on this one actually, because we really like their use of infographics, and we think they do such a great job of simplifying what is obviously a very complex value chain, but really sort of, mapping their impacts, risks, and opportunities throughout the value chain gives a really clear sense of the breadth of what they're looking at, whilst also really simplifying that information for the audience. They've got this overall vision, but then they also do a drill down in terms of topic specific coverage. And we think that's a real benefit in terms of helping people understand the operations of a company and where the impacts, risks, and opportunity lie throughout the value chain there. But we also want to be clear that you don't need fancy graphics to tell a good story. There are really simple ways you can do that. This example here from Pandora groups the IROs by upstream, own operations, and downstream. And again, we think that is a really quick and simple way to show where the issues and the positives lie, just in one visual slide here. But improving a story doesn't always have to mean expanding your content. Just restructuring how you share information can really aid the reader's experience in terms of how they engage with it. And we think it's a really worthwhile exercise. And one of the benefits we think is the way the ESRS breaks topics down by the stakeholders that they impact, creating a dedicated space to those different groups to show that you've really grappled with the issues and the impacts for all of those groups really comprehensively. This example from Demand Group includes fairly typical topics: services, engaging with consumers, product quality, safety, etc., into one place. And this is something we weren't really seeing until recently. So we think that's a real benefit in terms of taking reporting forward. Obviously, we think this is something that not every report is going to need to have the same focus on the same groups, depending on what your organization does. So it's something that needs to be adapted for each reporter. But we do think that increased focus on stakeholders is a benefit. So as a final note on the value chain, this is not a cool slide, and an illustration on how far we've come on value chain reporting, we also think it's great to see companies like DSV reporting their scope 3 emissions up front this year alongside other key data on revenue, profit, and cash flow, and we think this is a really great reflection of just acknowledging how this data is as critical as financials now, and we think that's a great step forward. And that leads us nicely onto talking about integration.
Yeah, thanks. And that slide is really helpful to show that some companies are considering sustainability as kind of part of their key performance indicators and really as part of their main strategy. Like full and meaningful integration of the sustainability strategy and the overall corporate strategy, and therefore merging the two stories we have to tell, has been something that people have been working on trying to achieve for quite a long time. Obviously, we had integrated reporting. We've had different attempts to kind of base annual reports around stakeholders better, like in the way that Claire just talked about. I remember that kind of 5-6 years ago. But quite often, to be honest, the two stories, quite often feel entirely separate. Separate strategies, separate stories told in separate reports. So I think the fact that the CSRD mandates, first of all, the sustainability story to be brought into the annual report is a positive in that sense. And then also that it kind of expects a greater explanation of how sustainability matters interact with and impact the business model and the strategy is a really kind of positive story, and something that is definitely something that all sustainability reports need to do better. Business models, have never featured in sustainability reports. Corporate strategies occasionally might be featured if the sustainability strategy is kind of a layer within that. But generally, understanding the business model and the overall kind of strategic aims of the company is like fundamental for the audience to actually be able to understand the impacts that a company has and the commitment that it's making to sustainability. Now, before we look at some of these examples, it is worth kind of pointing out, I think, that the examples of trying to comply with ESRS 2 that expects the discussion of strategy and business model, like this wasn't a particularly strong element of CSRD reports this year from our point of view. Like that wasn't a place where companies excelled in telling a good story there, but I think that some did. And it's an area that I think will get better over the coming years, and it's definitely something that is a positive trend for us to be moving in the right direction. So if we do have a look at a couple of examples, this couple of pages from ABN AMRO shows quite clearly, has some good kind of clear copy around how the role that sustainability has, very central within ABN AMRO's activities and within its goals. It kind of prominently positions it within the company's long-term strategy, has nice visuals, but also just like explains the story quite simply and clearly in the text. Now moving back to Orsted again, our favorite report in terms of storytelling, graphics, etc. They had this quite nice visual example that lays out kind of what they do, the sustainability challenges that get in the way or kind of affect what they do. So again, bring it up to that strategic level, and then how they're responding to that with their sustainability kind of strategy. It's really kind of simple, but it's also tangible, like clear actions that are challenges and actions that are affecting their day-to-day operations. Capgemini was one that had like quite a lot of information in this section, which we thought was kind of good. They really tried to kind of bring this business model story into the sustainability statement and talk about how sustainability and sustainability issues affect and impact its business model and strategy. So it features like a full business model within the sustainability statement, which wasn't something we saw many companies do. And then it kind of prominently positions sustainability within that business model and talked about how vital it is to various aspects of the business model and how kind of it really kind of elevated their sustainability story to a strategic level. And I think it's definitely worth considering how your report can do a better job of kind of positioning the business model within the sustainability story and kind of bringing those ties closer together. Now, the final kind of aspect of elevating that sustainability story to a strategic level that I wanted to kind of talk about was the CSRD kind of mandate that you should explicitly talk around the kind of financing of sustainability within the sustainability statement. And here's an example from Carlsberg, which we think is really strong in terms of they ended each of their kind of material topic areas with a section on current and future allocated resources. So they really kind of underpinned the kind of commitment and the investment that they're making to sustainability by being very explicit, saying we spent this much on these initiatives this year and we're going to spend this much going forward. Now, obviously, that is a difficult story to tell. It shows a very robust and rigorous approach on their part that small and medium-sized companies might be able to struggle to match. But I think the principle kind of still stands that if you have some good examples of going above and beyond and doing good sustainability work, potentially outside of your own kind of growth goals. But if you can demonstrate the kind of financial investment behind it, then it really just evidences your commitment. It really kind of underpins any kind of messaging that you have. But when you say things like sustainability is so important to us, if you can actually kind of put your money where your mouth is and show that money's been spent there, then I think that's definitely an aspect that more companies should explore. Again, that wasn't something that was done particularly well in the CSRD reports this year, but we expect that story to get better in the coming years.
Our hopes are high. And in a similar way, in terms of demonstrating commitment, policies, I get all the cool topics. They've always been a part of the sustainability story, but never as prominently as we see them now. So CSRD is quite a few companies on the hop by spotlighting policies as a key character in the story. Sometimes the things that get neglected or not really thought about, or you assume you've got a policy in place that it's still doing its job. And we actually think that ultimately forcing companies to revisit those dusty old policies, make them relevant to their current actions and targets, and get them in front of leadership to own and sign off again can only be a good thing. So now, for all of the reasons I've already mentioned, the examples that I'm going to share at this page are not the most exciting, but we do think there are benefits to take forward. This table from Net Company provides a really good level of detail, but quite succinctly. Also, the table shows that the policies are only available internally, so it's giving it an additional level of visibility to stakeholders that wouldn't have been there before in terms of what the internal policies are. We think that's a win. And for Paysafe's report, leading up to our special star, guest star. Now, this is not a fully compliant CSRD report, and we'll discussing with Anne shortly. But now relevant policies are shown for each material topic, really demonstrating the rigor that has underpinned their approach. And this isn't something that wouldn't have been done before CSRD. In this example, there are 8 policies linked to cyber and privacy, showing at a glance really how seriously they take their responsibility around data governance and customer trust, and showing how prepared they are for evolving threats related to cybersecurity and crime.
Thanks, Claire. Yeah, as I said earlier, sustainability reports have kind of always been cool and casual when compared to the more regulated annual report, and that in some ways that was a positive, but there were definitely negative aspects to that as well. I think having the kind of minimum disclosure requirements of the ESRS ensures that key parts of the story, your actions, your targets, your policies, and your data are being covered in a very kind of systematic way, which is really helpful for the audience if they're trying to compare what you're doing across chapters, across sections, across topics, even subtopics. It's making it a lot easier for the audience to kind of find out where information is, to be able to kind of quickly move through the report and feel like they're kind of in one consistent and logical flowing story. It also kind of then enables like you to compare reports between multiple companies more easier as well. So if you're trying to find out, you've got a keen interest in one topic, say, it may make it much easier for you to find that topic in multiple reports. I think this example from Heineken is anyone that appreciates kind of organization or uniformity can just look at
Don't
this
we
and just
all?
feel safe. This just makes me feel kind of comforted by how kind of familiar this looks as you flick through the sections. They open each one with this kind of nice kind of summary page that looks the same, has the same information, really kind of sets the scene. And yeah, it makes you feel like you're kind of moving through a story that's very well connected, very consistent. And yeah, it just aids your experience of reading the document.
I think it also shows that they've taken the same approach to each topic. Like in the past, I know you and I, Tim, have definitely worked on reports where, the S section might be massive, but another section might be much smaller, and this sort of enforces a bit more uniformity to that.
Yeah, and I think that this next example really builds on that as well because this is from Glenveigh and it shows how I picked these two topics because they neatly fit onto one page each, which made it helpful for the example. But as you can see here, we've got affected communities and consumers and end users, and the pages where they talk about what they're doing, those key areas I talked about, strategy, targets, action, etc. They're very consistent. They're the same. And what I really like what this shows here by them embracing that kind of structure is these are two areas where they don't have any targets, but they don't just not say anything about targets. They have a subheading targets and they say we don't have any targets in these areas. So it's really kind of increasing that transparency that we're looking for. It's rather than just having loads of targets in your climate section and then never mentioning targets again. They're kind of being open that they don't think these are areas where they need where they need targets right now. They might have targets in the future, but I think again, very easy for the audience that if they're looking for something specific to find what they're looking for. And I think that's just a really helpful way to help kind of the audience kind of get through the story. And then, like I said, comparing between reports as well. So we've got InPost, Shell, and Adidas is pollution sections here. 3 very different companies with very different pollution stories to tell. And I know these examples are very small on the screen, so you probably can't see exactly. But they followed the structure. The headings are the same, so you could very easily compare these 3 reports because that the story's told in the same order, the same subheadings, the same information is there, and it just really makes it very comparable between the companies. And again, it's very easy for the audience. Great. So we've kind of shown some examples there and talked about what we think is good about CSRD reporting. Now we'd like to bring Anne Euler, ESG Director at Paysafe, into the story. I've worked with Anne on Paysafe's first two sustainability reports published in 2024 and 2025. Paysafe's a December year end and they weren't due to comply, but for this year's report, we were in the thick of trying to take some inspiration from CSRD when the omnibus proposal was announced, which I think was a first for me in terms of, trying to consider regulation that was actively changing in the middle of a project. That really added a fun aspect to the project from all sides, I think. So welcome, Anne. Thanks for joining us.
Thank you very much. Thanks for having me.
Great. And I think we just start really high level in terms of what are Paysafe's kind of sustainability ambitions. What story are you trying to tell in your report?
Yeah, fantastic. Maybe like a couple of words about Paysafe before we get into it. So we are a global payments company. We have two sides. So we have merchants. So this might be like a restaurant where, you pay with your card on like one of those machines. We also have a consumer side of the business. So this could be like a digital wallet on your phone, but we also have cards. So they are the two kind of sides to the business. We are headquartered in London and we are regulated by the FCA here in the UK. We also do a lot of business in the European Union, hence the CSRD link, but we are also listed on the New York Stock Exchange as what is called a foreign private issuer. So quite a lot of aspects of sustainability to deal with. I joined the company a couple of years ago, and maybe it's also kind of important to say that this is the first time that there's kind of been a formal ESG and sustainability remit within the company. So there was, kind of governance or strategy. And the first two reports that you've mentioned, Tim, that we've worked on together are also the first two reports that Paysafe has ever published. So I think that kind of as a little bit of background. But yeah, you asked me what kind of the ambitions are when it comes to sustainability, or what the story is that we are trying to tell. And I think, obviously we are, as they say so nicely, it's all a journey and we are at the beginning of it. So I would say that we are aiming to be recognized as a responsible and trusted payments company, and that we are embedding sustainability into decision making for kind of long-term value rather than, it just being an add-on. We see it as an enabler for resilience and innovation and trust. And as I just said, not just a standalone function. So if you do look at our report and kind of the material issues that we've identified, they range from consumer protection, environmental impact. So they link strongly to the corporate strategy. When it comes to reporting, I think you've done a great job at helping us to tell a story that translates our strategy and governance systems, policies and data into kind of something meaningful for an external audience.
Yeah, I mean, for year one and year two of a business, it's been a fairly easy story to tell because there's been so much going on, and that's always the challenge in sustainability reporting is trying to tell a story when it's not there. So that's definitely not been the case with Paysafe. I think you were, because of the EU operations, you were due to comply with CSRD next year before the changes.
Yes.
But from the outset of this year's project, all the way back in kind of summer, I guess, when it was initially kind of kicked off, you talked about the ambition to try and expand the report and to integrate some of those key kind of content requirements of CSRD. What made you kind of want to kind of take that early adopter, getting ahead of the game kind of approach?
Yeah, so yeah, as you said, we would have been in scope from 26 for 25 data, which is something that we've known obviously since we've started all of this in 23. So I think even when we set out at the beginning trying to build a program, build a function, build a strategy, there had to be something to kind of look at. And CSRD was something that was a really good thing to take as a basis. So partly, of course, we wanted to be prepared when it does come, when we then are in scope. But I think it has always been a really good roadmap for us to start off with in the first place. I personally believe that CSRD was not kind of created in like a vacuum. So while like some things, might seem new, as you kind of say, with the comparability, it kind of encourages things that have been on the back burner for many companies. But that kind of process of having an approach to materiality and building robust governance systems, building robust reporting and data collection mechanisms, I feel has CSRD is taken from many aspects that have always been around for a long time and have been important for building these kind of programs and strategies for companies. So I think we felt that it can drive better data governance and accountability right from the outset. So even without saying CSRD in our reporting, we have found it very helpful.
Yeah, I mean, you've started to touch on there about some of the strengths of CSRD reporting for you. Was there anything amongst the actual CSRD reports that you've seen published now that you think that you'll particularly think, oh, that's a real kind of, that's really great, that's really a step forward?
Yeah, I mean, I would, agree with the aspects that you guys have picked out, and the first half an hour, 35 minutes of this session. I think the standardization of disclosure, so it's kind of easy to see how others are dealing with a certain topic. Obviously, us just starting out, but also many of our peers and kind of fintech and payments, also, being at the beginning of their reporting journey, because a lot of these companies have not been doing this for very long. It really helps to kind of know where to look. Also, when you look to, other financial services companies who you would expect covering similar topics, it really helps for us to understand key focus areas across the industry. I think double materiality was a good tool for for internal engagement as a starting point. It really encouraged conversations about risk, impact, and value, and also showed that this was not just something that we were kind of doing in a half an hour workshop on the back of an envelope, which I think has been really helpful.
Yeah, no, that's really interesting. And I think we've told a quite positive story so far around the good parts about CSRD, but as the company that was kind of starting to get to grips with that, we should probably talk about the kind of challenges as well, some of the challenges that led to that backlash we talked about earlier. So what were the challenges that you initially kind of came up against as you kind of started this process of moving towards compliance? Like, for instance, having to do a double materiality assessment, for instance, how did that go?
Yeah, so I think with the double materiality, we did a double materiality process as our very, very first materiality process in 23 when we were building out the strategy, because, as I said, we were expecting to be in scope. We are still expecting to be in scope, but we just will have a little bit longer to prepare. So it was important to us to, start how we are meant to continue. At the same time, regulation around the double materiality assessments and how you should be doing them was also changing between the first and the second year of when we were doing it. We found that a little bit challenging, and also I think regulation got tighter and more strengthened. I think external providers that were maybe helping people with it, I think, are also getting their heads around the requirements. So I think the second year where we had to layer a lot more detail onto our double materiality assessment to work towards regulatory compliance, I think that was challenging, especially now knowing that we are kind of 2 years delayed, by which time we're probably going to have to do it all again. I think that was tough. I also think I found that kind of, you showed really nice graphics of kind of business model and value chain, which personally I felt for a business like ours, it was really, really difficult to kind of map that. I mean, you tap your card somewhere and you think like the payment is really quick and kind of really not very complicated, but everything that happens behind the scenes is hugely complicated and also very much not a traditional kind of input-output model. So mapping that and explaining it around the value chain and identifying those kind of outside in and inside out impacts was quite challenging. And also, I think looking across some of the other CSRD reports, I do feel that some of the ones, also mainly the ones that you showed, actually, I think that are that kind of traditional, we buy resources, we do something with it, and then, you know, for example, the Pandora, and then we sell our products. I think they've tackled that quite well. I think others have also found that a little bit harder.
Yeah. How did you find having to bring kind of auditors into your sustainability reporting process for the first time?
So we did a kind of private internal pre-assurance, also with the view of having to obviously comply next year. I wouldn't actually say that it was particularly tough because of CSRD. I think it's always challenging when you do it at, you know, at the beginning of a journey. As we've said, this is kind of our second report. We're 2 years in building governance and data and performance management systems. So I think that always makes it quite hard when it's the very first time that you kind of do even an internal process of asking lots of questions around kind of controls and data quality that normally just people in the finance function get asked.
Yeah. And obviously we pulled out Paysafe as a good example of the policy approach underpinning what you're doing by showing that you've got that policy framework in place. Was that in place already, or was that something that you kind of responded to with CSRD? Was that like, because you said the whole kind of CSRD has been driving your sustainability reporting approach from the off, really? So was policy something that you were well prepared for, or was that something that's been an ongoing battle?
I think policies are something that is very, very, very strong at the company, but I think CSRD was a great driver in making sure that, well, first of all, not just for reporting, I think internally it really helped us almost a little bit as like a gap analysis, because it really helps, you know, to kind of see where maybe you don't have the right policies, or where does a policy potentially need reviewing and updating. So I think that is really helpful in kind of helping with that whole, well, you've sorted out the governance and now you've sorted out like the management up and down, and like, well, you want to measure performance, but what are you measuring it against? So you need a proper policy. And all of that, I think, should lead to, well, the transparency in reporting that we've discussed. Therefore, you should be then reporting on the policy framework that's in place so that people know what you're trying to judge your performance against.
Yeah, that's been really helpful, I guess, to talk about the positive aspects of this, not just on not like taking reporting aside, but like internally as a business, like helping you to understand things and to communicate things clearly to the stakeholders within the business. Because I don't think that that's something that people talk about very often, I guess, in the backlash against the burden of so many data points and stuff, is that actually trying to gather this information can actually be helpful.
Yeah, totally. And I also think for us, in terms of it just provided a really useful framework to explain why we are trying to do certain things, and not just, oh, because CSRD, but as I said earlier, because it wasn't, you know, invented in like a vacuum. Even TCFD wants you to talk about your governance approach and your strategy, and how does it link to the business strategy, and, you know, what policies and frameworks do you have in place to then set your targets, and how do you measure this? So it's all related, I feel.
Yeah. And I think, you know, because we've talked about this, that you are, I guess, quite a CSRD positive person. When the omnibus dropped in the middle of the report, can imagine that you probably wasn't kind of a huge temptation to change direction, but was there a part of you that, in terms of actually getting words into the report in the middle of the report, were you tempted to maybe be like, oh, we can just maybe worry about this a bit later? Or were you always just like, no, let's go ahead and this makes sense for us? And
I think, I mean, I think you could do a word search. We don't ever say the word CSRD anywhere in our report,
Yeah.
which I think, to some extent is important, not to suggest that, we have to comply or that we are complying at this stage. I think we continue to kind of very much use it as a tool to kind of report on the things that we already know we have. We found it really useful for that as well, almost as, a little bit of a checklist to kind of go, well, what policies do we have? Or at some point we might have to report this metric. Do we already have it, and is it maybe decent enough to put it in? Also for internal engagement, as you've said, the kind of it's much easier to kind of say there is this framework who could help us to tell whether we've got anything here. But yes, I do also think it has helped a little bit and kind of taking a little bit of the stressful burden of knowing where gaps are, to know that we've got a little bit more time to fill some of those gaps. Because yes, we've said it a number of times, this is only year 2 for us. So, publishing a fully compliant CSRD report next year would have been a very, very heavy lift for us. So being able to kind of on certain things kind of go, well, this is not just a kind of need to report on it. This needs to go on the to-do list to do something about it because we haven't got much to say. Having a little bit more time there is quite helpful.
Yeah, and that takes us nicely into the last question I had, was around what kind of key learnings do you take into next year? Obviously, having that extra space to get to compliance, how do you view the kind of the reports that are on the way to that journey now?
Well, I think, what I just said, it's great to have a little bit more time to kind of build certain things up and embed new practice, and also, to test whether certain things that we think are working, are they working, the governance system that we set up and the reporting up and down and kind of champions network, is that working? Do we need to change things? I think, yeah, it's also a good opportunity to take a step back and recognize how far we've kind of come from, having no real data or governance system to a strong position that, well, we would have been able to be compliant by next year. But as I said, having a bit more time. But yeah, we will also certainly kind of look at enhancing data automation, documentation, but also making sure that, the strategy that we have developed in 23 continues to be fit for purpose in, I don't know, a rapidly changing world, I guess.
Yeah, exactly. Thanks, Anne. It's really, really appreciate you taking your time to talk to us about your own journey today. So I hand back over to Claire to kind of come back and wrap up, and then we've got some time for any questions at the end. And I think Anne hopefully will stick around to answer any questions anyone might have for her as well.
Yeah, sure.
She's going to have to now. Lovely. Thank you, Tim. We did have a few examples from Paysafe's report, but I'll whiz through those in the interest of time, and just recap really on the key takeaways we hope you all took away from the conversation today. So we think it's really important to be mindful of CSRD because we think it's already changing best practice. It's changed how leading companies are reporting and will continue to do so, even as the requirements shift and evolve. We also really hope you've taken away that CSRD can be a good thing, and even if there are some burdens introduced by it, we think there are some real benefits that it's introduced in terms of that transparency, accountability, comparability. And we also hope that you see that there are a number of ways you can be inspired by CSRD to improve your sustainability reporting generally, and get better at telling the fantastic stories that we know are in all the companies that we work with. As Tim said, we do have a little bit of time for questions. So if you've got any questions, feel free to stick them in the Q&A. I believe there's a Q&A. Yes, now, and we will try and answer them. Alternatively, if you do have any questions that you want to come back to us separately, we're always happy to get emails from you or connect with us on LinkedIn or ask questions that way. So I'll just leave it open for a moment and see if there's any more questions to come in. No, I don't see any questions there. Okay, marvelous. Well, thank you everyone so much for joining us. Thank you especially to Anne for being so open with your experience of CSRD reporting this year. And thanks everybody for spending your time with us this morning and listening to our webinar.
You're
We
very
have got a
welcome.
question.
Oh, I've
Oh.
got
We
a
have got a
question.
question for Anne that's come in.
There we go. What type of audit was performed on Paysafe sustainability report?
So we did a kind of what you would call an internal or private pre-assurance, which covered our DMA as well as a number of key metrics.
Excellent, thank you. Any other questions before we do close off? I like that we got one just before the deadline.
Yes.
Nothing like a deadline to focus your thoughts. Okay, marvelous. As I said, if anybody does want to probe anything any further, feel free to get in touch. And yeah, thank you all for your time today.
Thank you very
Thanks very
much.
much for your time.
Thank you.
Cheers.